Friday, March 27th, 2020, MONERO 64, home of alternative economics and contrarian views. So it's been an eventful week for the precious metals market, especially gold, but also silver. I've been telling people for over 4 years through my videos that the only way to defeat the bullion banks, to defeat this fiat currency system that creates credit out of thin air, the only way to do it is to demand physical delivery of gold and silver, ETFs, futures. There's nothing behind them, and this week has proven that. So the bullion banks in New York and in London got squeezed really bad, and I'm going to talk a little more about it. I found out a little more of what is really going on. All week I've had many viewers of my channel asking me where they can get physical gold and silver. I've had viewers from all over Europe ask me that. They can't get gold, for example, in Holland anymore. All the gold that's ever been mined in history, 99% or maybe even a little more of that gold is still above ground, of course. It's stored in vaults. Usually it flows, but when there's a lot of fear about the soundness of the financial system, about the competence of the central banking authorities and governments, gold will go into hiding. And I think we're at that juncture. We've seen the Federal Reserve increase its balance sheet to over 5 trillion. I think they bought about 600 billion of paper this week out of thin air. We've seen the 2.2 trillion fiscal stimulus coming from Congress in the US. We've seen fiscal stimulus everywhere else in the world. We've seen the Bank of Canada cut rates to almost zero today and announce $5 billion in QE every month. So I think investors are getting concerned and they want the real thing, not the paper. Of course, there's a little bit of arbitraging going on. With that, though, I'm going to reference very good articles just come out in the Wall Street Journal. I do subscribe to the Wall Street Journal. And it says, coronavirus sparks a global gold rush. I personally don't think it is the coronavirus. There's been a lot of usage of this crisis to excuse or to explain everything in the markets. My opinion, of course, is the flight to safety. People don't trust the central bankers anymore, or they're starting not to trust them as much as they did. I think people realize there's no end in sight to the QE, to the money printing. We saw the Fed could not normalize things or do the QT and raise rates. We saw that the market was almost collapsing in 2018. They had to reverse everything. And now they've gone into overdrive, and it's not only the Fed, right? So let's go through this article. It's just come out in the Wall Street Journal. It says, epic shortage spooks doomsday preppers and bankers alike. And it says unaffordium and unobtainium. So no one can afford it and no one can obtain it. That's because people know, the people who hold gold know that it's the only kind of money that will protect you from central banking irresponsibility and the massive money printing that we're seeing. And I don't think this is over by any stretch of the imagination. The bankers might succeed for a while in keeping the gold price under control, the paper gold price. But the only way to win this battle, and it is a financial battle for the general public, for those who have tried to safeguard their savings and wealth with precious metals, the only way to make sure that the bankers don't win is to demand physical. The bankers hate it when you ask them for physical. I know from personal experience years ago in Switzerland when I asked Citibank for physical delivery. They refused, of course. So I had to close the position and go to another bank to get the real gold. So that's the way the bankers operate. And why do they hate gold, and especially people getting physical gold? Well, because when you get physical gold, you're not playing their game. You're taking your money out of the system. You're not lending them the fiat currency, right? So let's go through this article. It says it's an honest to God doomsday scenario and the ultimate doomsday prepper market is a mess. As the coronavirus pandemic takes hold, investors and bankers are encountering severe shortages of gold bars and coins. Dealers are sold out or closed for the duration. Credit Suisse Group AG, which has minted its own bars since 1856, told clients this week not to bother asking. In London, bankers are chartering private jets and trying to finagle military cargo planes to get their bullion to New York exchanges. Well, that's to the Comex or Crimex. So you see, the bullion banks are so desperate in London that they're even trying to get the military to help them fly the gold to New York. So does that show that gold is not important to the system? I think not. It just goes to show you how important it is and why you need to keep a hold of it and why you need to get the real thing if you can. I'll continue. It's getting so bad that Wall Street bankers are asking Canada for help. Well, the government of Canada has 0 ounces in reserves, but they're asking the Royal Canadian Mint. It looks like it says the Royal Canadian Mint has been swamped with requests to ramp up production of gold bars that could be taken down to New York. So there you go. There's a run on the Comex. That's what they mean by when they say New York. It looks like Comex could be in trouble. We have to see if they succeed in getting the physical to Comex. So let's continue. With staff reduced at the Royal Canadian Mint because of the virus, the government-owned company is only producing one variation of bullion bars, according to Amanda Bernier, a senior sales manager. She said the mint has received unprecedented levels of demand, largely from US banks and brokers. Well, Comex again. So let's continue. The price of gold futures rose about 9% to roughly 1620 a troy ounce this week. So a 9% rise. I think it could have been a lot more if they probably hadn't manipulated it as much, the paper market. That is 31.10345 grams per the UK Royal Mint. So what they mean there is that 1 troy ounce is just over 31 grams and near the 7-year high. Only a handful of occasions since 2000 have gold prices risen more in a single week, including immediately after Lehman Brothers filed for bankruptcy in September 2008. When people think they can't get something, they want it even more, says George Jarrow, 83, who's been trading gold for more than 50 years, now at RBC Wealth Management in New York. Look at the toilet paper, he said. Gold has been prized for thousands of years and today goes into items ranging from jewelry to dental crowns to electronics. Well, that's a very small part of it. Gold mostly, of course, is money, as we know. For decades, the value of paper money was pinned to gold. Tons of it sat in Fort Knox to reassure Americans their dollars were worth something. Today, they just have to trust. President Nixon unpegged the dollar from gold in 1971, August 15th. The government still holds lots of gold in Fort Knox, Some would argue they don't have that much, but be as it may, let's continue. Though not as much as it did decades ago, the Federal Reserve Bank of New York has a massive gold stash. Yeah, but most of that gold is not theirs, really. It's for foreign central banks and foreign countries. The gold isn't released on the open market, though. It's held as national reserve. Well, national reserve for other countries, actually. London is the hub of physical gold trading that often changes hands. Gold is popular with survivalists and conspiracy theorists. There we go. What rubbish. Wall Street Journal. I do subscribe to the Wall Street Journal, but I think that's rubbish what they're saying. But it is also a sensible addition to investment portfolios because its price tends to be relatively stable. Of course, it's been the most stable store of value for over 3,500 years. That's why it's money, Wall Street Journal. Even JP Morgan knew that when he said that gold is money and everything else is credit. And I don't think that has changed in 107 years since Mr. Morgan made that statement in Congress. It is especially in demand during economic crises as a shield against inflation. When the Federal Reserve floods the economy with cash, like it is doing now, dollars can get less valuable. Gold is the one money that can't be printed, said Roy Seabag, CEO of Gold Money Inc., which has one of the world's largest private stashes worth about $2 billion. There are two ways to own gold: in bars or coins or jewelry stored in bank vaults, or in futures contract traded on an exchange, which guarantee the holder a certain amount of gold at a certain price on a certain date. I will say one thing about Comex, and I worked as a futures and options broker for 20 years. So anyone hardly ever takes delivery of gold on Comex. But I think now with all the dealers and mints all around the world running out of gold and silver, people are trying to get the gold from Comex because apparently, supposedly, they're supposed to have that gold, but I don't think they do, and that's the whole problem. Those contracts trade on the CME Group's Inc. Comex division of the New York Mercantile Exchange. The problem, much of the world's gold is in London and has been since the 17th century when the Bank of England set up a vault. That might be true, but the Comex is supposed to have the gold there. It's supposed to be deliverable on Comex. Today, the Bank of England says it has the second largest collection of gold in its vault, behind only the New York Fed. Again, that gold doesn't belong to the Bank of England. They hold it for clients. And most of those clients, of course, are sovereign governments. Australia, for example, the RBA, the Reserve Bank of Australia, they hold 80 tons at the Bank of England. The disruptions this week pushed the gold futures price on the New York Exchange, Comex or Crimex, as much as $70 an ounce above the price of physical gold in London. So yeah, I said that earlier, $70 higher. It was about $1,700, while the spot price was around $1,630. Typically, the two trade within a few dollars of each other. The Gulf sparked a high-stakes game of chicken in the New York futures market this week. Sharp-eyed traders started snapping up the contracts, physical delivery contracts, right? Figuring banks would have trouble finding enough gold to make goods, and they would be able to squeeze them for cash. That set off a scramble by the banks. Gold Money's Mr. Seabag said bankers were offering him $100 or more per ounce over the London price to get their hands on some of his New York gold. So it just goes to show that the Comex, this paper market, is a sham. It doesn't really reflect the real price of physical gold coins and bars. It's just yeah, it's like the tail wagging the dog, and it's been doing that for years, unfortunately. Hopefully the dog or the physical market is going to take over soon. And you can help that. People out there, they might think, oh, I can only buy 1 ounce or half an ounce. But if enough people buy physical gold and silver, if you get thousands, hundreds of thousands of people doing the same thing, you can defeat these bankers. Wade Brennan, a former gold trader at Scotiabank, who now runs an investment firm called Kilo Capital, said he had heard from bankers in the US who were literally checking the corners of their vaults for any gold that might have been overlooked. Everyone's looking through the cupboard, he said. So there you go. I won't continue. It's a lot longer, this article, but you can see what's happening here. I don't think it's over. I think it's going to get worse. The bankers are in trouble. The bullion banks, of course, are in trouble. They don't really deal in physical gold. And when the market decided that they wanted physical gold, they couldn't get it. They were so desperate that they had to try to get the military to help them fly the gold from London to New York. That just goes to show how desperate they are. We'll have to wait and see next week to see what happens. Yes, there's enough gold out there, but when there's fear about the monetary system, about the banking system, people who hold gold know the game, and they're not gonna let it go. What's gonna make gold come out of hiding? Well, I think a lot higher prices, but I don't think we are anywhere near such a level. The bullion banks, of course, are agents of the central banks, and they're gonna fight tooth and nail to defeat those people who want the physical. To conclude then, yeah, the central bankers, the bullion bankers, they're like the Goliath, right, of the monetary system. And we're David. And the only way to slay Goliath or the giant is through physical. I think we can go a long way to defeating these people. And they're going to try to keep fighting by printing even more money, and that's going to make it even worse. So there you go. Unaffordable, unobtainable right now, and it's going to get even worse. So make sure you hold on to your physical precious metals. Don't worry about the fiat price. As Jim Rickards says, you have to worry about how many grams or ounces, or for some people, tons that you have. If you enjoyed this video, make sure you hit the like button. Make sure you share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, BitChute, Steemit, and DTube. I wish you all a great weekend. Take care. Bye.